ONUS called itself safe while designing the trap. In late 2023, Vietnamese police opened a criminal file referencing billions, specific names, and one internal decision made well before ONUS began struggling. A decision regulators say was never disclosed to users. That decision has still not been fully explained in public. By 2022, ONUS had 1.5 million registered users, roughly 1.5% of Vietnam's entire population, on a single domestic platform. It offered crypto savings yields sometimes exceeding 30% annually. It was not marketed to traders or institutions. It was marketed to first-time savers using it as a bank substitute. They were dominant, and they knew exactly who they were targeting. The yields weren't generated by trading. They weren't DeFi returns. ONUS was lending user deposits to institutional counterparties and recycling the interest back as rewards. That model works until the counterparties stop paying. The product that made ONUS famous wasn't a crypto feature. Vietnamese prosecutors later argued it was an unregistered financial instrument, illegal under Decree 52 from the day it launched. Not because of the hack, because of the design. In December 2021, a critical vulnerability was discovered in the smart contract layer ONUS used to process its DeFi savings products. A security advisory was reportedly circulated inside the engineering team identifying the flaw. Before funds were drained, it was not escalated. No external action followed. The exploit window stayed open for weeks. It gets worse. Approximately $1.4 million in user funds was drained through that vector before ONUS acknowledged the breach, and $3 million to upward of $8 million in stablecoin equivalents moved through wallets tied to ONUS's institutional liquidity infrastructure in the 72-hour window surrounding it. The timing has never been officially explained. What happened during those weeks is still being reconstructed by investigators. What is confirmed, approximately $1.4 million in user funds was drained through that exploit vector before ONUS acknowledged the breach. What is not confirmed, whether all internal parties were informed simultaneously or whether the disclosure was staged. That distinction matters significantly. Here is where the public narrative begins to fracture. ONUS's public statement after the breach described it as an external attack. Unavoidable. A sophisticated intrusion. The company positioned itself as a victim. But internal communications reviewed by Vietnamese investigative journalists in 2023 suggest the vulnerability had been flagged internally prior to the public exploit, not after. Before. A security advisory, reportedly circulated inside the engineering team, identified the flaw in the same infrastructure days before funds were drained. The advisory was not escalated, or if it was, no external action followed. The company described that window as a technical review period. Regulators described it differently. The average ONUS user was not a speculator. Vietnamese financial journalists who covered the aftermath interviewed dozens of account holders. A recurring profile emerged. Mid-30s, first-generation investor using ONUS's Grow savings product as a substitute for a bank deposit, because the rates were higher and the app was easier. One user, quoted anonymously in a Van Express report, said she had transferred her entire emergency fund onto the platform 6 weeks before the exploit. She had read the ONUS blog post explaining that user funds were protected. She had screenshot it. She couldn't withdraw for 11 days. While retail users waited, something else was happening on the back end. Blockchain analytics firm Chainalysis, and separately, on-chain researchers publishing through Twitter and Mirror in early 2023, traced a series of large wallet movements occurring in the 72-hour window surrounding the breach. These movements originated from wallets associated with ONUS's institutional liquidity infrastructure. The amounts were not small. Estimates ranged from $3 million to upward of $8 million in stablecoin equivalents. The timing of those movements has never been officially explained. Here is the detail that reframes everything before it. ONUS was not just a consumer app. It was, according to Vietnamese Ministry of Finance documents from 2022, operating as an unlicensed securities dealer. Vietnam does not recognize crypto assets as legal securities. That classification exists in a gray zone. But ONUS's Grow product, the savings product marketed to retail users, was structured in a way that Vietnamese prosecutors later argued constituted the issuance of unregistered financial instruments. The product that made ONUS famous was, by the government's reading, illegal from the day it launched. Not because of the hack, not because of the breach, because of the design. ONUS's founders consistently described the Grow product as a crypto utility feature, a staking mechanism, not a financial product. That framing was deliberate. Under Vietnamese law, a staking mechanism does not trigger securities regulation. A deposit product that promises fixed returns does. The difference between those two definitions is not technical. It is the difference between operating legally and operating in violation of Decree 52, Vietnam's framework governing investment instruments. The product paid fixed returns. It had maturity periods. It had guaranteed yield tiers. Prosecutors say it met every definitional element of the instrument they were forbidden to issue. The founders say it didn't. In March 2023, Vietnam's Ministry of Public Security, the National Police Authority, formally opened a criminal investigation. The specific charge framing referenced appropriation of assets through fraudulent means, a category under Article 174 of Vietnam's Penal Code that carries sentences of up to 20 years. This was not a regulatory inquiry. This was a criminal file. Multiple suspects were detained for questioning. Vietnamese state media confirmed at least 2 individuals with direct operational ties to the ONUS ecosystem were held by Ho Chi Minh City Police. Their names have not been officially released. But filings reviewed by local legal journalists identify figures connected to both the VNDC parent structure and the Grow Products Yield Management Desk. The investigation did not stop at the exploit. According to documents cited by Vietnamese outlet Than Nien, investigators were examining whether the platform had continued soliciting new user deposits after internal leadership was aware the yield model was under stress. If true, that is not a data breach story. That is a fraud story. The distinction is precise. A breach is something that happens to a company. Continuing to onboard users while knowing the model is failing is a decision made by people inside it. The timeline being investigated stretches from mid-2022, well before the December breach, through early 2023. 18 months of potential exposure, 18 months of marketing, 18 months of user deposits. Internal communications described by Vietnamese prosecutors include one exchange, reported in detail by Cafe Biz, in which a senior operational figure asks whether new deposit campaigns should be paused given current liquidity constraints. The response, according to the report, the campaign was not paused. It was expanded. The ONUS story does not exist in isolation. Vietnam's crypto market in 2020 to 2022 was a specific and documented phenomenon. A young, mobile-first population, low banking penetration, aggressive regional marketing by offshore platforms, and an almost total absence of retail investor protection infrastructure. ONUS understood that market better than anyone. Its Vietnamese language content strategy, its partnership with domestic influencers, its deliberately accessible UI, these were not accidents of product development. They were a calculated acquisition funnel aimed at exactly the demographic least equipped to evaluate the risk they were taking on. First-time investors. Savings substitute seekers. People who trusted the domestic brand over the foreign ones. The trust was the product. The broader VNDC ecosystem, the parent structure behind ONUS, had other products running simultaneously. VNDC itself was a Vietnamese dong-pegged stablecoin. It was presented as a domestic alternative to USDT. It circulated across multiple Southeast Asian exchanges. During the same period investigators are examining, VNDC's peg came under pressure. Redemption requests slowed. According to on-chain data, the circulating supply of VNDC continued to be minted, even as redemption velocity dropped, a pattern that blockchain analysts describe as a warning signal for stablecoin insolvency. That data was publicly visible, on-chain, in real time. Nobody in a position of authority said anything. After the breach, after the investigation opened, after the detentions, ONUS rebranded. The app was restructured. The Grow product was suspended. New terms of service appeared. New language about regulatory compliance entered the platform's communications. The founders gave interviews describing the incident as a turning point, a lesson. One described the breach as a catalyst for building something more responsible. The investigation was ongoing when he said that. The detentions had already happened. The framing of a learning moment, applied to an active criminal probe, is either extraordinary confidence or something else entirely. Here is what the record shows. A platform built on a yield model that Vietnamese law may have prohibited from day one. A security vulnerability known internally before it was exploited. Wallet movements in the breach window that remain unexplained. A deposit campaign expanded during a liquidity crisis. Detentions. A criminal file. And a rebrand timed to the exact moment public attention peaked. Not a sequence of failures, a sequence of decisions. Every single step had a decision maker. The users who lost money didn't invest in a scam. They invested in the version of ONUS that was shown to them. The gap between those two things, between what was shown and what existed, is exactly what investigators are now trying to price. In Vietnamese law, that gap has a name. It's called fraud. Every platform that calls itself the safe option is making a promise. And the question worth asking is always, safe for whom? This is Redacted Chapter. Subscribe so you don't miss the next one.